RBC Capital analyst Tom Narayan maintains a bullish outperform for Tesla stock despite lowering the price target from $293 to $227. Tom still expects 2024 full-year deliveries to be 2.1 million vehicles, and despite lowering its fiscal year 24 earnings per share to $3.48 from $3.83, they say that it really didn't lower the valuation Tesla shares, as most of their forecasts are based on robotaxi and FSD. Today, we're going to watch that video where he was interviewed. He says some things that Tesla bulls will agree with, and he agrees with. He calls himself a bull, but then he says some things that are weird, and you can be the judge. Larry, thank you for joining me.
Sure. Great to be here.
So Larry's a multi-entrepreneur, and he has been following FSD as closely as we all have been, and specifically, he has a closer kind of analysis and understanding of these analysts, these institutional analysts, and we all want to understand what are they thinking and how are they evaluating us. So Tom Narayan, he was on Yahoo Finance, and he maintains an outperform rating on Tesla, but at the same time, he reduced the price. One of his quotes he said was, "We believe robotaxis could potentially transform society more than anything else in our lifetimes. We conservatively assume 25% Tesla robotaxi penetration in the US." So I'm not sure that his analysis is as deep as comprehensive as ARK Invest. And you had Elon mention 3 times at the annual shareholder meeting. He likes ARK Invest's analysis and he thinks they're most accurate. Before we watch the video, any comments on that?
Yeah, I've followed Tom for quite a long time, probably 3 years now, 3 or 4 years. And, it's interesting. I've made the statement before that Wall Street are not really giving much value to FSD. They're beginning to give some value to FSD, which is the only reason Tesla stock hasn't fully reflected the decline in actual earnings. And so we're beginning to see this, and even our good friend Gary Black is now, admitting that there's some value being assigned. And the thing about Tom's analysis, and we're going to dig into it deeper, is that it's kind of halfway. It doesn't, dismiss FSD as some of the analysts who, have got very low price targets on Tesla have, but he doesn't fully value it, or he values it as, somewhat competitive, but, it'll get 20% of the market, 25, some percentage of the market. And so, you have to think about whether, in fact, FSD is going to be so far ahead of the market that they're going to get the lion's share, or, as Tom says, they're going to get, a good share, but not the lion's share.
Yeah, I like the way you position that. He seems to at least value it more than others, but yeah, the way when he starts talking about it, and it doesn't seem as deep. Let's listen to what he thinks and what he's saying.
Yeah, there are really 2 things. The first thing is we looked at what pricing would be in a world of robotaxis, and we realized with working with our internet team who covers the ride-hailing companies, Uber and Lyft, etc., that pricing will actually be lower. It'll come down as this will be a regulated industry. So we lowered our pricing. The second thing is we increased.
Okay, I have to pause it there. What's your thoughts about that? That the Tesla pricing of the robotaxi will eventually go down because it's going to be regulated, because there's going to be so much competition. Yeah.
Yeah, well, the regulators tried to regulate the ride-hail industry, and how did that work out for them? Now they're going to regulate the autonomy industry in terms of pricing? I don't think so. It's going to be very, very hard for any ride-hailing vendor to compete with a Tesla-based ride-hailing service. Now, I'm not saying that Uber will not provide a Tesla ride-hailing service. That may be part of Tesla's plan, and Tesla may come up with that partnership. That won't be competition. That will be, a win for Tesla. It's going to be incredibly difficult to compete with Tesla from a pricing point of view. Incredibly difficult. They don't have the cost of LiDAR and the cost of the level of compute that these companies are putting in their cars. They are way ahead in terms of training and capability. And in terms of cost of vehicle, they are, I mean, there's no comparison. And they already have 6 million vehicles on the road, of which probably 1 million to 2 million already, ready to be offered as ride-hailing vehicles. So the scale of it, the pricing of it, the cost of it, and it really plays very, very handily into Tesla's world. And finally, Tesla's lead in terms of software. If you think about the Uber capabilities, great software, but then you look at what Tesla has, on the back end in terms of the car and the vehicle software, it's like a different world. Uber's software depends upon the input of the user and the driver. There's nothing coming from the car other than location. Tesla turns that upside down. Tesla has the vehicle, the vehicle intelligence. And that changes everything. I've spent a lot of time in Uber vehicles in the last year, in the last 3 months, particularly in Europe. Having that knowledge in the vehicle is a whole different world to having the driver having to, intermediate that knowledge. So yeah, it's going to be Tesla's world, and everybody else is going to have to pay rent.
Okay, let's continue listening to what he said.
The value that we think will go to those companies, the app companies, the Ubers, the Lyfts, as a higher revenue share percentage than what I was assuming previously. So it's really those two things that lowered the Tesla-specific robotaxi valuation. But we still love robotaxis, and we still think it's going to be the biggest contributor for value for Tesla.
By when, Tom?
Well, my valuation, I think you guys remember, is based off 2040, and then I discounted back. But I do think on August 8th, we will get an announcement that we will start seeing some actually near-term deployments of robotaxis, but it'll be in cities like we've seen probably like from GM Cruise and Waymo, and cities like San Francisco, Austin, Phoenix. It's a very small scale. You're not going to get this at mass scale for years, if not decades out.
Okay. So this is where he gets wonky. So he believes in robotaxi. Crazy, but decades out, 2040. And it's like, and then by then, Uber and Lyft are going to get the lion's share of the revenue. What? I don't understand what you're talking about, dude. But okay. And then I get what he's saying, right? August 8th, yeah, it could just be, small little pockets. Absolutely. But then he says it won't become large until even decades out, years and decades out. So I'm confused. But okay, we have different opinions.
Yeah, I think Uber and Lyft may get a lion's share of numbers of rides, but they will not get the lion's share of the revenue. The lion's share of the revenue is going to, devolve to Tesla because Uber and Lyft and Waymo and Cruise are not going to be able to provide the scale that Tesla provides. And as far as timescales are concerned, we're going to see robotaxis in operation before the end of 2025. We're going to see scale, real scale, by the end of 2027. And by 2030, it's going to be pervasive. So we're 10 years ahead of Tom's analysis. And if that's true, if what I'm saying is correct, then the value of that accrues to Tesla is many, many fold what Tom has assigned.
Yeah, it's okay. I'm going to go ahead and assign robotaxi. Great, but then it's going to be like 20 years away. Don't bother. Okay, let's listen in to some more of what he says.
And on that exact point, Tom, when do you anticipate the Tesla robotaxi revenue kind of being a contributing factor to Tesla's overall profit margins?
Oof, not for a while. It could be 5-10 years away, but it's one of these things where when it happens, It will happen in a big way, right? The automotive or transportation industry is a $6 trillion industry today. Autonomy, robotaxis, autonomous vehicles has the chance to make this much bigger, 10 billion potentially, right? Takes share from planes and trains and gives mobility to the elderly, children, people with disabilities. And so it's one of these things that will be a tectonic shift in how we all live. It's going to take a long while before it contributes financially to any of these companies.
Tom, when you think about city infrastructure, does there need to be a significant change in city infrastructure in order to facilitate safe robotaxi rollouts?
Absolutely. Yes. That's probably the biggest hurdle. We spoke to the CEO of Stellantis last year at our conference, and he said, like, the tech isn't really that far away. It's not the tech. It's really the cities need to re-engineer themselves, right? I mean, just think about, I don't know if you've been to Paris, the Champs-Élysées. It's not a lot of computers able to make decisions. It's humans making aggressive decisions on how to drive. And so cities have to completely change themselves, reorganize. It's already happening in China. Some Western cities, in London, go check out Oxford Street. There's only certain vehicles can drive there. Manhattan is talking about stuff. So it will happen, but yeah, cities are going to have to change dramatically to allow for these things to happen, but they will.
So he's I guess an expert in this space, and then you need to find an expert. I'm going to talk to the Stellantis CEO.
That was the very weak introduction into that segment, to talk to the CEO of Stellantis. Anyway, but besides that, there is a lot of sense in what he says in terms of cities evolving. I'm not sure it's going to be regulation that's going to change. I think it's going to be the car that's going to force the change. After all, regulations have done nothing to control the car in the major cities of the world. In fact, the cars control the regulations far more than the regulations have controlled the car. I think that, as we've seen in San Francisco, for example, with Waymo, Waymo adapted without changing regulation. In fact, regulation has somewhat stultified the growth of it, but it's grown nonetheless. So I think that the advent of FSD is going to be as dramatic as the introduction of the car was in the late 19th century. So I think there will be some regulation, there will be some intervention by regulators, but it's going to be a force that's going to be very difficult for them to control. Very difficult.
Yeah. He's talking about infrastructure changes, and before robotaxi happens, they need to make massive infrastructure changes. And
I don't see it.
Don't see why, but okay. Let's listen.
In fact, I think that's the least problem.
Right.
That's the least problem.
It's shocking that he said that, but it's logical, but it's not likely. Okay, let's listen in.
Hey, Tom, I do want to end on the Lyft and Uber of it all. In your note, you talk about lowering the estimates for the company's robotaxi venture, but you're also allocating a bigger revenue share to service providers like Uber and Lyft. Why?
Yeah, so there's like three parts of the ecosystem here with robotaxis, right? You have the software, you have the vehicle, and then you have the app. I think there's going to be a lot of software providers. I think Tesla will be a big player in this, but there are a lot of folks making software for autonomy. The vehicle, lots of car companies are going to make the vehicle, but the app, that's one where our analyst, Brad Erickson on the internet team, talks about how that's very sticky. It's a moat. Just look at how you use your apps today, right? Like, how many apps are you going to have on your phone to order a car, right? I have one. And so, that's really, I think, where a lot of the power lies. And that's something that I've raised. And they collect right now for every Uber fare I think you take, I think 25% of it goes to the app, goes to Uber, right? Not the driver. So that's a big lion's share for that stickiness. So that's why we changed our view on that. And we think actually that the app is going to have a lot of power. Tesla is going to make their own app, sure, for sure. But we do think some of these other app makers who already own customers are going to have a lot of power as well.
Oh man, I wasn't planning on stopping it there, but so he says the software, FSD, everybody's going to make that. The car, autonomous car, everybody's going to make that. And the hard part is the app. What? And then he's saying that the Uber app is so sticky, people will not change the app. Okay,
he's kind of right and he's kind of wrong.
Okay,
he's kind of right and he's kind of wrong. The people who own the Uber app, and it's a very large proportion, of the ride-hailing population globally, but there are other apps in other locations, and so it's not been an absolute victory for Uber, but they're clearly in the lead in terms of total numbers. But in every country, it's different. Every country, there's a certain degree of, differentiation. What he's not allowing for is the power of the Tesla app in terms of its integration into the car, the number of Tesla cars on the road, and the economical, the competitiveness of the Tesla car versus all the other cars, regardless of the app. So I think that the importance of the app is being overemphasized simply because he doesn't understand the power of FSD compared to the competition. He says there's going to be a lot of cars and a lot of competition. That's the failure in his assumptions.
Oh.
Elon Musk just won his pay package, Tom, but it seems like he's also on the AI front in his other endeavors, perhaps on a warpath to make sure that he is drumming up some major partners growing forward on the corporate side here. How much of a risk is that for Tesla?
His pay package specifically?
Not the pay package, but when you hear that he's not only threatening to ban his employees from using Apple iPhones and whatnot, but when you hear about him and the other businesses that he is also running where he might get upset that some of the core partners that he's had for years are now cozying up to other partners instead of XAI, for instance. Does that create an overhang for his other businesses, in this case, Tesla?
I don't know about that. I mean, this is a very well-run business. It's not just Elon running this company, right? As much as I think a lot of folks think it is, right? Just go look at the event they hosted in March of last year where they had all those folks they trotted up on stage. I mean, this is a company with some really powerful businesses, not just this robotaxi endeavor, FSD, the energy storage business. So these are, and they're led by some very enterprising, smart individuals that are running these businesses. So I think at this point, he's the visionary, but these are businesses that are run very well by his lieutenants.
Okay, so we heard that again. Oh my gosh, Elon, because of his relationship with his other companies, Tesla is actually going to be impacted by that, as opposed to the other way around that we've seen over and over and over again. All those other companies, XAI, Grok is going to power the bot and the car. SpaceX Steel was what they used for a Cybertruck. The AI knowledge is shared. It's like, okay, he thinks that it's actually a negative, that these other companies might impact Tesla negatively. Okay.
Well, I mean, we heard just how the guy got tongue-tied in trying to present the case. I mean, what he's trying to do is take all these little pot shots that were thrown at Elon and try and package them into some kind of, threat to Tesla. I mean, it's the same old. But in terms of Tesla's focus and the intense focus that Elon has had over the last 3 years, you only have to see how this AI technology is coming together. This huge inference, this huge AI computer that they're putting in Texas. It's been 3 years in the making. This doesn't happen overnight. People think, oh, he just buys stuff from NVIDIA and boom, boom, it's magic, it happens. No, that's not true at all. What's going on in Texas has been going on for 2.5 years, a huge development. He's adding to that. Yes, it's true. He's adding to it using third parties such as Dell and SMC, but this has been in planning for a long time. This doesn't happen overnight. So, this whole thing about his other companies and his pay package and so on and so forth, these are side issues. This is just noise. It's just noise. The focus has been there from the beginning. It's coming together. It's coming to get together rather quickly, and we're going to see, not just on 8/8, but over the coming year and a half, we're going to see this thing become revealed, and we're going to see the extent of it. So I'm pretty confident about the future.
Okay. Wish you were an institutional analyst, Larry, but unfortunately, this is what we get. And they get some parts of it, they get a lot wrong, but this is the fun part for us to look at and re-examine what we think. This guy thinks it's 2040. Okay, maybe. Let's see what the probabilities say. Thank you so much, Larry. Follow him on X, Tesla Larry. See everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.